Hi everyone, let's go over my micro and local bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the micro bullish scenario where we are looking at a finished WXY structure to the downside, three waves where inside wave W we had a zigzag number 1, then we had a very shallow wave X retracing to the 0.3 Fibonacci taken from the high to the low of W, which is a minimum retracement target for a wave X in a double zigzag scenario where then this wave Y also has to be a zigzag on the lower time frame. Now this wave Y then bounced on top of the 0.618 taken from the high over here to the low of W to the high of wave X, and now you really want to see impulsive structures to the upside, which means we want to see 5 wave moves towards the upside, at least reaching this blue target box as resistance above, sitting between 26.5k and 26.6k. If price manages to get through this area, the next area of interest is the double top that we have over here at 26.7k, high number 1 and high number 2, and then I'd be looking for this box at the highs sitting between 27.1k, 27.3k, and if we even go higher than the last one over here, 27.7 to 27.9k. The invalidation is if price would move to the downside and go below these lows. Now in general, we were looking for support and a bounce in this area over here. First of all, we had the 0.618, but also right on top of the 0.618, we had the point of control of this volume profile as shown in the previous video as well, which starts at the 18th of August. Besides the 0.618 and the point of control, we had this target box and potentially the 1 to the 1.236 as shown in the previous video over here. And basically all of the scenarios I've shown in the previous video, we're looking for a bounce in this area over here. Now potentially this is the low and we get that bounce, right? Of course I have a bearish scenario coming up as well. Now if we zoom in to this structure, right, we want to see an impulsive move towards the upside. So if we go to the 5-minute time frame and we zoom in a little bit further, then in this wave 1 over here, you can see 1, 2, 3, 4, 5 wave structure, very nice 3-wave retracement, where this wave 2 retraced to the 0.382 taken from the beginning of this wave 1 to the high of wave 1, toggle on the 0.382, which is the purple line on my chart right now, and you can see it retraced to the 0.382. A less common target for a wave 2, but a target nonetheless. Very nice indeed. Then we want to see a bigger wave 3 to the upside, usually the strongest, biggest wave in an impulsive structure where you actually want to see price moving up to the upside more and more quickly, and we want to see volume increasing as well. Now as it stands, this move over here does have higher volume, but of course we want to see continuation. We want to see at least this high being broken again, and then a potential 1, 2, 3, 4 and then a 5 wave structure. Now usually a wave 3 goes to at least the 1.618 trend-based fib extension taken from the low to the high of 1 to the low of wave 2, which is just above price over here. However, wave 3s can be quite extended, so then we go to 2, 2.618, 3, 3.618 and higher until eventually the high of a wave 3 is in. It's also always quite difficult to figure out where a wave 3 is exactly going to end. However, as mentioned before, this target area over here for me is at least an area of interest, and on these lower time frames you really want to see at least this high being broken, and hitting the 1.618 would be very nice. If we then zoom out once more and actually go and have a look at the bearish scenario, then in the bearish scenario we are still looking for another move towards the downside. So we have a 3-wave move over here, a zigzag in wave W, shallow X, but then we are looking for still a 3-wave structure to the downside in a wave Y, ending after the 0.618 fib time, which is taken from the high to the low of W to the high of wave X. Usually a wave W and a wave Y are quite similar in time, and this low over here, as you can see, has been made before the 0.618. Now if the 1-to-1 fib time is not respected for a wave Y, then most commonly it's the 0.618 or the 1.618 that is respected for a wave Y, but in this case I now just toggled on the 0.618, which is sitting at midnight Central European time, as you can see at the bottom of my chart. So in this particular scenario we're then looking for a rejection over here and a move to the downside. The invalidation of this scenario would be for price to take this high of wave X at 26.7k. So if price continues takes this level, then this particular scenario is invalidated, because in a zigzag structure over here to the downside, you don't want to see this high being taken, the beginning of a wave A and then an A, B, C. The start of wave A is not allowed to be taken with the high of a wave B. And if we then zoom in to this particular structure over here, then basically we want to see a 3-wave structure on the lower time frames and not a 5-wave move. And that is a big difference, because now we are looking for a 5-3-5, 5 waves, 3 waves, and then another 5-wave move to the downside, meaning this structure to the upside should be part of a 3-wave move, either a flat or a zigzag. Now also, this has to be a 5-wave structure to the downside, and it's actually not easy to count this as a 5-wave structure, but it's actually also not easy to count this as a double zigzag structure in this particular scenario. Now you could count this over here as like a 1, 2, it's a bit of a weird wave 2 then, but like a 1, 2, 3, 4, and then eventually you have a wave 5 to the downside, where this wick is the low of 5, and then we'd be looking for a zigzag to the upside over here, where then the target for a zigzag is mainly between the 1 and the 1.618, which, as you can see, is currently where price is ranging. But if we go above this high and go to higher prices, then a zigzag is getting very unlikely, so that's something we have to remember. And a potential flat could be an idea if we think this is an A, this is a B, and this is a wave C to the upside, where a wave C is always a 5-wave move. It's just in general, the main area of interest for the bullish scenario is taking this high, and then we can look for higher prices to come and potentially the higher target boxes. But as long as we don't take these highs, we still have the potential for a move towards the downside, because over here it's not easy, as mentioned, to count a double zigzag in this move to the downside, which in the bullish scenario is exactly what you're looking for, this being the low of a wave Y in a double zigzag, which means a 5-3-5-wave structure. But as you can probably see as well, it's difficult to count this move over here as a 3-wave structure in a 5-3-5-wave move, which increases the probabilities a bit for at least another move to the downside. Now, if we then zoom out, or no, we stay on this time frame, sorry, and we look at these CVD divergences, then we had these bearish CVD divergences as shown in the previous video as well, and as mentioned, price was ranging on the 0.886, and that is important because if the 886 is hit, which is taken from the low over here to the high, if the 886 is hit, then preferably you want to see it move away from the 886 and not come back again. However, when price came back once more, that is then the probabilities for price taking this low increase incredibly. So what happened is price moved to the downside and wicked this low as we were looking for, as mentioned in that previous video, and it was a swing failure pattern. Of course, we don't know if we wick this low and then go up, or if we wick this low and continue to the downside. In this particular scenario, we found a move to the upside, little bit of bullish divergences over here I saw on the lower time frame. This is the 5-minute CVD chart, higher low in price, and as you can see over here, a lower low on the blue CVD, so a bit of bullish CVD divergences at the low, for then the beginning of this move towards the upside. Now, if we have a look at the news this week, which I haven't mentioned yet, then as you can see, Thursday 10 p.m. Central European Time, as well as Friday 2:30 p.m. Central European Time, there is a red flag, and a red flag means volatility can kick in, so make sure you trade safe around these hours. And if we then finally look at the probabilities, then on the micro we are looking for a bounce. As mentioned also earlier today, we're looking for a bounce in this area over here, for then at least price reaching, in my opinion, the double top, which is definitely an area of interest at 26.7, if not higher prices going to this higher target box over here, and you know, we see what price will do. On the local time frame, however, I write that I'm quite neutral, but maybe I'm still a little bit bearish till the moment we actually reach these higher levels, mainly because this move to the downside over here is so short for a potential wave Y in that bullish scenario, because this low has been made before the 0.618. Now, my probabilities will change if we can actually at least take this high over here more locally, and then I want to see bullish CVD divergences over here when at resistance. So if we look here and we reach that target box, What I want to see is, maybe a bit of a retracement, but I want to start to see bullish CVD divergences on the chart, and then I get more confidence in a continuation to the upside, because the real invalidation for the bearish scenario and another move down is price taking this high for a WXY scenario. So basically, areas of interest is this target box over here and this target box over here. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.